what was kind of unfortunate with us, you don't actually lock in an interest rate until basically a few days before funding. It's a very specific process. I would recommend you actually go into the bridge route.
Yeah.
Take the time to do the work needed to turn over the units, get it up to market rents, and then you go to CMHC.
All right, guys, welcome back to another session. So this is part 2. In the part 1, we discussed everything about CMHC MLI Select with Larry. He is with Canada ICI. They do a lot of underwriting and a lot of deals there. They're even a lender for the CMHC MLI Select programs. Now, in this specific video, we're going to touch base on his specific personal deal that he did, where it was an older building here in Cochrane in Calgary. As you guys know, like with the MLI Select, there's different criterias for older buildings. So I'm gonna let Larry take over, and if you can give us a quick breakdown on what exactly did you do with that building.
It's actually this building is quite a long story, I would say. Where do I start? I guess like it was 12 months before I even before we closed on the deal. I had initially ran the numbers on the deal. I saw this is on MLS deal, so it was on the market.
So you found it on the market?
It was on the market. I didn't have a realtor or anything. I was just searching for things, and I found it 12 months before I actually closed on it.
Wow.
I ran the numbers at the time, and they were good, but they were tight. And so I talked to my partner, my wife, and we were just like, let's give it some time. Maybe they'll
reduce the price.
Yeah. So fortunately, like I think 6 or 8 months later, I got a notification saying, "Hey, the property."
6 to 8 months, it sat on the market.
Yeah, for a long time. Yeah.
Okay.
There was a price decrease on this, and I was like, "Oh, okay, let me run it again." And in this time, 6 to 8 months, there was also like rent increases and various other changes to the building. So I ran it again. I was like, "Man, these numbers are amazing." Like it was debt servicing with the calculations that I have, like 1.3, 1.4.
Wow.
Yeah. So it was a very high cash flow deal, and that was what attracted us. But what we found from that deal was that it was pending on and off quite a lot. Like people were looking at it and then
putting in an offer, not
exactly
going through.
Exactly.
Red flags.
Yeah. To me, it was not like maybe. Like to me, I saw it as an opportunity. I was like, okay, like if I come in and I show them I'm actually serious,
yes,
they might be willing to be able to do a much longer conditional window or give me a better price. And so that's exactly what I did. I went to them and I went up front and I said, look, I would love to buy this building, but I need at least 3 months to be able to close.
Just the condition.
Yeah, just to waive conditions, right? But I'm very serious. Like I'm willing to give a very large deposit, and so that's how we structured it that way. The seller, very fortunately, he was like, you know what, like this guy, he's Canada ICI. He seems to know what he's doing. Let's try it out. And so he gave us, I think, initial week to do the due diligence, and then it was either 60 or 90 days of a conditional window to do the CMHC financing, which I was very, very grateful for. And so that's exactly what we did. We did $100,000 deposit. So we were very serious about our deposit.
It came in strong.
Yeah, it came in very strong. We were willing to show that we had the funds available.
So in terms of numbers, you said it was in Cochrane, right? So
correct.
Cochrane is just outside of Calgary, just a small city, and closer to the mountains, beautiful city again. And I think rents are also pretty much the same as Calgary and Cochrane.
I wouldn't say they're the same. They are a little bit lower. I would say maybe 15, 20% lower than Calgary. What I noticed about this building that I was buying was that it was basically market rents. There's two things there. Like the advantage of that is that I could go in with CMHC financing and get full leverage by doing that. But the disadvantage to that is that it's still an old building and it still needs work to be done, right? There's repairs and maintenance and things that are coming up. And so because all of these things, they cost money, there's no room to increase the rent any further to get any more value.
There's no market rent.
Yeah, exactly. So the rents were very strong, in my opinion. They were, like, obviously it's a 1970s building, but the rents on average were close to $1,500 a month for 1 bedrooms and 2 bedrooms.
What was the layout structure for the building? Like how many?
It's a low-rise apartment building, so 3 stories, 3 units on each floor.
So 9 units in total.
Correct. And the upper units, they have patios. The lower units, they're just, I guess they have windows and doors, and that's it. And it's a common entrance, and then you go into. It's a little bit different than the eightplexes that you see, where everybody has their own entrance and
Mostly
their own,
2-bedroom, or?
I can't remember. I think it's 4 of 1 bedrooms and 5 of 2 bedrooms, or the other way around.
Okay.
But it was 1 and 2 bedrooms. But the rents were very impressive, and then we got when we did the expenses and all that, like it ended up netting quite a bit of cash flow, and to us it was very attractive.
So when you first bought the property, and then you got the 3-month condition window, you directly went to CMHC, right?
Correct.
So sometimes people do an interim financing where they go private initially, and you didn't have to because you were able to negotiate better terms.
Yes.
And then, so did you guys do any renovation to the property or at all, or after you purchased it?
Not much, just small repairs and things like just like the things that you would commonly see in an older building, like, hey, there's a small leak in the sink, or
So what's the high level numbers? Like, how much did you buy it for, and how much down payment did you have to put, and what's the cash flow you're getting right now?
Okay, so so we got the building under contract at about 1.8. And then through the inspection report, we negotiated it down to 1.7. Good. Went to Peak Hill to do our financing.
Oh, yeah.
Yeah. They were very good. I've worked a lot with them, so I highly recommend them. That took a couple months. What was kind of unfortunate with us was that something that many people don't know is that you don't actually lock in an interest rate until basically a few days before funding. Like, there's it's a very specific process where the lender they go to like a certain bond desk, they retrieve a bond, you have like a 5-minute window to lock in that rate. So it is a very, very
intricate process.
Yeah, it's a very intricate process for sure. And what happened to us was that we had to lock rate basically in the 2 weeks where the rates were the highest that it had been in the past like 12 months.
Okay.
And so that didn't end up going well for us. Like we locked in at about 4.75 interest rate, where today it would be closer to a 4 or a 3.9% interest rate.
Yeah.
So that definitely didn't help with the cash flow. But yeah, so the numbers at high level, 1.7 million. The rents, it grossed about $13,000 a month.
Okay.
9 units, about $1,400-$1,500 a month per unit. And then our expenses were about 35% of it.
Okay.
And with the loan, like the mortgage payments and all the other expenses that we have, we are typically cash flowing about $100 to $200 per month per unit.
Per unit.
Yeah.
Okay.
So about $1,500 per.
$1,500.
Yeah, per month.
And how much down payment? 5%?
So the funny thing is that we actually didn't need to use MLI Select to close on this.
Okay.
Yeah, so CMHC has another product. It's called the CMHC Standard or Market product that goes up to 85% leverage.
Okay.
And in that product, you don't need to have any affordability, energy efficiency, or accessibility. The only caveat to that product is that it has a higher insurance premium. And for me, I was like, I ran the numbers. I was like, I don't want to pay this much insurance premium. So I chose to do MLI Select at 85% leverage.
Okay.
So I had to put in 15% down for this deal. But because of that, I was able to save half the insurance premium. And to me, that I thought that was worth it. But to somebody else, it could be a different decision.
Did you get the 50-year amortized?
No, I got to 40-year amortization.
Okay.
Yeah.
Yeah.
50-year is usually something that you can get if you've done like recent renovations or the building looks like it can do 50 years. Ours was a slightly older building, so it would be very difficult to get 50.
So when you went the MLI Select for an older building, how did you qualify for? Let's say you could have gone 5% or 15%, but like, did you cap a certain affordability to get to 85%?
Yeah. So the minimum amount of points you need is 50 points through any of the different scenarios. And how I did it was I used affordability, And this funny thing is, I actually found out somebody who put this exact building under contract, but they let go of it because they didn't understand the CMHC. They thought that Cochrane had a different median renter income than Calgary.
Okay.
But based on my experience, I'm like, no, like Cochrane is actually part of the greater Calgary region, and they'll actually use the 1737.
Yeah.
And so in theory, I could have said the entire building is affordable if I wanted to.
Yeah.
But I was able to take advantage of that, and for us, because our appraisal didn't even get to the 40-year or 50-year amortization, we just decided to put 40% of the units as affordable to get 50 points. So for us, that's four of the units, and we thought that was sufficient. So that gives us 85% financing, to lower interest rates, to lower premiums. 40-year amortization.
Good.
Yeah.
So I think when someone's going for like an older building, which is already there, 1970s, 1980s building, the best way for them, I think, is like if they're in Alberta, especially with the 1700, it's going for a layout mix, which is 1 or 2 bedroom, so they can cap almost a lot of them, and then get a higher loan to value, right?
Yeah, I mean, it's in some scenarios you don't want to cap the rents too much. Like if you see that there's room to increase them, there's no reason.
Yes.
But for our deal, I was like, these rents are already at market.
Yeah.
I don't really see us being able to increase them more than 1,500 in Cochrane, right? So that was a reason why I was okay with the affordability. I would say for most people who are buying buildings, like older buildings, most of the times they're going to be trading at much too high of a price. They're going to be trading at like a 3% cap rate.
Yeah.
Mostly because these sellers, they don't have a mortgage on it. They just don't care about the rents, right?
Yeah.
They've left it for like $600 rents for like 20 years, the same tenant. So maybe it's not NOI, the NOI is not there. In which case, I wouldn't recommend you go to CMHC direct. I would recommend you actually go into the bridge route.
Yeah.
Take the time to do the work needed to turn over their units, get it up to market rents, and then you go into CMHC.
Are you seeing a lot of people actually doing it where, using this as buying underperforming units and under-rented, deferred maintenance unit, renovating it, like getting in private, as you said, and maybe you can touch base on which lenders they can go with for private, and then renovating and switching back to CMHC? Like, is that also, like, are you getting in a lot of applications yourself?
I wouldn't say a lot, and the main reason is because you must know that Calgary, there's not many old buildings that trade.
Yeah.
Like I can probably count the number of buildings that are available on the market.
Yeah.
With just a few fingers, right? Like there's not that many. But in markets like Edmonton, there's a huge supply of older low-rise apartment buildings, and that's where the strategy would make sense. And obviously, you buy it at a good price, right? You negotiate something and be like, okay, look, I can find a private lender that can close in 2 weeks.
Yeah.
Maybe we can knock down the price a little bit.
Which lenders are you seeing?
For bridge types of financing, some of the usual people, the people who do CMHC will actually look at bridge as well, many of them. So, like PQ will actually do bridge financing. There are other lenders. I don't want to name too many because there's like pros and cons. Like Calvert, for example, they will do multifamily, and one of the big things is they'll close in like a week, right? Even for multifamily. So there's options like that. The only thing is that you're obviously looking at like 10+% interest rates.
Yes.
And you have to be very quick. You have to be very strategic. You have to have like a team in place to know what you're doing to get the rents up to
time.
Yeah, exactly. Every month you waste is quite a bit of a.
And I also think even if you do that, even if you pay like high interest rate and everything, and if you're going CMHC MLI Select, provided the building can do a larger amortized mortgage and whatnot, and they're still able to pull almost a lot of their capital out, right?
Correct.
Especially because of the debt coverage being at around 1.1. Would you say so?
Yes. In most cases, most cases they're buying it with like a 75 or 80% loan to value
initially
mortgage.
Yeah.
And then if they structure it correctly, they'll get 85, 95% of the new value after it's been renovated.
Right.
So in most cases, they'll be able to get most of the money out, if not all of it.
Cool.
Yeah.
No, sounds good. So I think we've touched base a little bit about older building financing as well, just like we discussed. And so where can people find you?
I mean, I'll leave my contact information in the description, but you can just call me, give me an email. We're happy to underwrite deals. Basically, like that's all we do all day, right? So
For sure.
so yeah, you can reach me out. I don't really have that big of a social media, so
Yeah.
it's not. It's not
But I'm
something
telling
where-
you guys, he's your guy. He can get stuff done, whether it be new builds, whether it be older buildings that you want to still go with CMHC MLI Select. And then you also do just the normal commercial financing as well. So I'll leave all the contacts as we discussed. And if you have any other further questions, guys, feel free to reach out to me or Larry here. And we'll be providing more of this content. If you found any certain value in it, make sure to share it with someone who would also find value in it as well, which will really help us grow this channel as well. And we'll see you in the next one.